Hi folks, Scott here, and this is the wrap for Thursday, September 12th. So, sort of a quiet day today. It was an inside day. Actually, I'm not positive it's an inside day. I'm sort of kicked back in my chair. I can't tell if the wick, if we put in a new high from yesterday or not, but hold on. High was 83 and a quarter. Yesterday's high was 82.50. So not an inside day. Inside day would be a higher high and a lower high and a higher low. That was not the case, but what we did do was put in a red candlestick that opened and closed inside the body of a green candlestick. It's called a bearish harami. And in fact, you can learn more if you're interested. I've done an entire research presentation on about 20 candlestick patterns. See if I can find them for you. It's here under research. Well, it's supposed to be here under research. Maybe it's, oh, I know, it's part of the bundle. We've got a bundle here. That's probably our best deal anyhow. It's included in there. I thought we had it as a standalone. So anyhow, major history of 16 major candlestick patterns. Sorry about that. Anyhow, it covers this specific unique pattern. It doesn't fire that frequently, but it is indeed bearish. So I'm going to show you the results right now for this particular pattern. Bearish harami, opening above, after closing above the 10-day moving average and also above the 200-day moving average. I'll use gap trade on my backtesting tool, and there you go. So it's happened 36 times the past 10 or 11 years, 50-50 on which way we're likely to gap, maybe a slight bias for gapping up. And if gapping up, very strong historical data point, 16 of 20. Let's see if that's MTG. That's MTG stop parameters. So this is actually, I normally only show this with end of day stops. I forgot to change it. That's with MTG stops. So that's a very tradable setup. However, a down gap historically is very bearish, just like the name implies, a bearish harami. So only 5 of 16. That's pathetic. Very weak. Even though sample size small, is still unusually weak. So clearly a short bias following such a pattern. As always, I'll defer to our gap guides and my other normal pre-market analysis before I make my final decision. But on the surface, a gap up tomorrow looks to be attractive. All right, let me show you what we had today. And I'm sorry, there's some annoying anomaly here. It says format strategies that I cannot get rid of. So just ignore it. Let me show you the worksheet going in today because we had pretty good setups. We closed right at the highs yesterday. And historical win rate for gap fill met my criteria, 62% and 1.4 for a gap up. Between the high and the close was really non-existent. It was only a tick or two difference in most indices. But a gap down was slightly attractive. You had to look at the individual gap guides, which is what we had today. There were no unique date factors or no unique patterns. So let me show you the guides and show you that the UCO zone was indeed attractive. I'll start with the futures. UCO zone for my 3 systems weighted average was 74 and 1.4. That's strong for gap fill. Not bad for extended target either. Looking at the YM, strong numbers, neutral in the NASDAQ and neutral in the Russell. Looking at the ETFs, strong in the SPDR, so the SPDR confirmed the ES, which you always want to see. The diamonds did as well. And the Qs did too. And again, the Russell's neutral. So 5 of the 8 definitely met my criteria. No other risk factors to worry about because there were no other unique day factors or unique patterns. So this was an easy decision for me to fade the gap. Let me show you my pre-market comments. On last night's wrap, I showed also good numbers for gaps in either direction, especially if we were gapping up. Gap down was neutral though. After 5 consecutive highs was a very strong numbers. So 5 consecutive higher daily highs went above a 200, 22 of 26 wins on down gaps. So bottom line is we had attractive overall setups in the guides. Unique data here was positive, mostly positive. Was concerned with small gap size, as I said here, potential mixed opening directions and futures contract rollover being today. Just it confuses some traders and systems and normally results in lower volume, and sure enough that's what we had today. So bottom line, my plan, I posted right at 9:20 a.m. Eastern time what I would fade the open of the S if it opens up or down with at least 1 point of opportunity, so less than 1681 or 1683.50, and at least 2 of the other futures markets also trading the same direction at 9:30. I'll use a half size position, hold some with the extended target. Well, as it turned out, it was trading at under 1681 or right at it at the open. It popped a little bit at the open, but before I could cancel the order, and we had the indices were we had the NASDAQ sell off and open down. So the NASDAQ and the Russell were gapping down, meeting two of my three criteria. Only the YM was not. So I left it alone. It was a half-size position. My mechanical system literally filled it before I could cancel it. So because it all just traded on not huge volume, but a lot of volume right at the open. So I left it alone. I got my first target hit in just a matter of probably a minute or so for plus 1 point. I held the second half of 1684, the extended target. Took a little bit of heat before it made a run at it, and let's see, it missed me by 3 ticks. At that point, it triggered my proximity rule for that part of the trade because I was pretty committed to the extended target and had tightened my stop to that point to -1, and I was stopped out. It missed me, stopped me out for -1 for a net scratch trade. I think actually it was -3 ticks, so technically a win, but we call that a scratch trade, right? So wasn't a loser. It was a good trade. Now I want to share with you what I did in another account. I'm doing a little bit more of this. It makes a lot of sense. Quite a few of my members have done it and asked me why I don't do it. And it does make sense. And in the spirit of trying to give folks different ways to trade different accounts with different objectives, here's what I did today. I set up at the open, whoops, I don't know what I clicked, at the open a delayed entry at 79. So I thought I had missed it. But I decided, since it didn't really trade through gap fill and extended target was still favored, I set up an order at 79. And one of the reasons I chose 79 was that using a 5-point stop put my stop at 74. And let me show you where 74 was, because that was important. 74 was below yesterday's highs, which was 76.75. So this was technically a heat gap setup. I didn't mention it in my pre-market comments because it was already bullish enough. But if you remember, go to members download area and read up on the heat gap setup. It's a sister equivalent of the cowboy setup. So this level, if you look at the green level, is 1676.75. So by waiting for 79 with a 5-point stop, I got my stop more than 2 points below yesterday's highs. This area will often be tested and hold. Now today it filled me, didn't even make it down there. Then went up. I got plus 3 points. My target was 82 on the first half. And again, when it got within 3 ticks of 84 here, I tightened my stop to entry. In that case, 79. It was stopped for break-even. So I averaged a 1.5 win on that approach. Now what's interesting is, what was the low today? 75? Well, it actually says it right. Low was 74.75. So my 74, I honestly didn't realize this until I just said it, or just showed you. It did not violate more than 2 points. 2 points are just a magic number for trading the ES. I always try to keep my stops at least 2 points or further beyond key levels, like the high of a prior update in which you closed higher. So good concept. The trade was over for me by that point. But that was my thought process. I was able to eke out a bigger profit. And the downside was, by waiting, I technically missed a 1-point winner right on the gap fill. But again, it made good sense because we had strong numbers for extended targets to go ahead and enter on a delayed basis. And that's what I did for a nice little win. And there were some folks that did take the high fade today. I noticed in the trading room comments. I did not. I think it was like 4 of 8 met the criteria. Just not quite strong enough for me. Such bullish momentum. So I left it alone. But some people did catch 4 points on that. So nice going. And there you go. That was my day. And that is the wrap for Thursday, September 12th.